which indicators should I use? All right. So today we're gonna, start thinking about this because it's not an easy answer, or this question doesn't have an easy answer. But let me quickly give you an overview first of what can we offer you in terms of indicators currently. So as you know, we have a whole spectrum of different indicators grouped into certain themes. So we have what we call market IQ indicators, which will basically help you do, which will help you with the technical analysis of the market. Basically understanding, hey, what is the current story of the market? Where are key levels? Where is the most heavily trade volume? What is the overarching trend? What are the headlines? Basically, these indicators help you with your technical analysis, which you then can use to make conclusions about what may happen in the future with price. Okay, so these are our market IQ indicators. We also have the other extreme of pure or rogue technical analysis, which is down here. We have our trade signals indicator, which will give you clear entry signals and clear exit signals. Basically telling you, hey, there's a buy set up right now, potentially you want to act on it. Or there's a sell signal right now, potentially you want to act on that signal. And then we have what we call the market sentiment indicator, which will, give you additional information about the current market conditions. What this may mean will mean we're going to elaborate a bit later on. Okay, so how can we approach this? Which indicators should I use? It's, in fact, a great question. And the answer is, well, as always, it depends. So let me try to ease into this. How do I choose? And I believe the answer to this is by asking yourself, hey, what kind of a trader am I? What kind of trader are you? And I don't want to go through the traditional way of approaching this question, because typically what we would ask, and there's nothing wrong with it, but typically what we would ask is, hey, are you a trend trader? Are you a counter trend trader? Are you a day trader? Are you a swing trader? Whatever that question may be. But let me give you some other categories just for the fun of it. So these are some new categories perhaps you may want to think of. You may ask yourself, hey, am I what I would call a black box trader? What is that? Well, a black box trader is someone who doesn't really care too much of what and why the market is reacting a certain way. A black box trader doesn't care too much about technical analysis, about support levels, about, where's the most heavily traded volume, about trend. A black box trader wants to have a simple trading approach. A black box trader would like to have, in my view at least, clear entry signals, which the indicator will give him or give her. Clear exit signals, perhaps with some mathematical evidence of how well these signals have performed so far, with optimizations and adaptation to market conditions. Basically, the indicator will do everything for you. It will analyze the market, and based on what the indicator sees, it will give you these clear entry and exit signals. To me, that's the definition of what I call the black box trader. Because we don't try to look into what's going on in the market. We just want to see, hey, what's the conclusion of what the indicator sees? That's one extreme. I call this type 1 black box trader. And fun fact, when we started out with trading indicators, just a little history thing here. When we started up, the first indicators that we've written, they were all down here in this black box category. Trade signals, just trade signals. Not so much up here, they were down here because we thought, hey, the majority of traders, we thought perhaps are in this category. All right, so that's type 1. Type 2 is, hey, are you a white box trader? What is this? Well, a white box trader is someone, and I'm curious as to what you guys are in the room, but maybe we can have a survey next time. A white box trader is somebody who really wants to understand what's going on in the market. What is the current story of the market? Where are key levels? What is the trend? Where is the volume? Where are trend lines and so forth? And the white box trader wants to use all this information to come up with his or her own conclusions of what may be happening next. A white box trader, very much so, trades with his or her discretion and prefers flexibility, not just, black box buy and sell signals. So that, to me, is the other extreme. And then type 3 is a mix of the two. You may want to call it gray box trader, or whatever it may be. So type 3 is, hey, you want the best of both worlds. Perhaps you want to see trade signals, but you want to qualify these trade signals with your understanding of the current market story. So to me, these are the 3 types of traders out there. And maybe answer to yourself first, hey, what kind of trader I want to be, or I am? And there's merit to every single category. There's no right or wrong. I think understanding of what kind of trader you are or you want to be will help you with your selection of which indicators you want to use. All right. So with this understanding, let's go back to our categorization here. So which indicators should I use? So I believe if you are a white box trader or like a gray box trader, then the market IQ indicators should be your primary indicators on your chart. Liquidity IQ for key support and resistance levels, volume IQ for action zones and the volume profile, MA rush for trend, and 1IQ for confluence of these indicators. If you are more or primarily a black box trader, I think the trade signal indicators should be primarily on your chart. 1 to 3 strike, divergence cloud, volatility crusher, and so forth. These should be the indicators. These should be primarily on it. And of course, there's nothing wrong with first having a set of indicators on the chart, but then supplementing them with some additional ones on demand, but don't have them all together on the chart. So I think this gives you a bit of the order in which you want to enable or disable indicators on your chart. And then you may say, hey, what about these middle guys here, market sentiment? Who should use these? That's a great question too. So let me try to zoom into this question a little bit. So market sentiment indicators would include our trend radar indicator, which we've used in Liquidity IQ, TI matrix for multi-time frame analysis, TI pairs for correlations between symbols, and gap IQ for finding gaps in stocks and ETFs. So who should use these? Well, these indicators, at least the way we designed them to be, they provide what we call supplemental information about market conditions. And each of them addresses a very specific area of trading, which may or may not apply to you. Some examples. So trend radar, for example, it's really great at finding pullbacks in a trending market. It's awesome. But if you're not a trend trader, if this is not your trading style, if you don't want to wait for pullbacks, you do something else, you're waiting for breakouts, for example, hey, trend radar may not be the indicator for you because that's not what the indicator is designed to do. Okay. Another example. For example, our gap indicator. It's great for trading stocks and ETFs. Symbols which actually do have these overnight gaps. Futures trade overnight. They don't have these gaps. Crypto trades overnight and on the weekend even. They don't have overnight gaps. But if you're not trading stocks or ETFs, maybe this indicator will not be for you. But it's a great indicator if you're a swing trader. For example, here for Microsoft, you can see Microsoft currently is trying to close this down gap. You can see it here. This gap from there to there. Microsoft is trying to close it. And if you look at the statistics which come with the indicator, you can see Microsoft, in its history of existence, has closed, except for this one here, every single other down gap. You can see this here in the statistics. So stock traders can use this information to spot these gaps and trade accordingly, for example. Or perhaps be aware of these gaps and use this in your decision-making process. All right. Now, so what else do we have? TI matrix is another indicator which a trader may use if you think multi-time frame analysis is something you want to incorporate in your trading process. Because what TI matrix does, it will show you at the glance what are the trends and sentiments across multiple time frames. Yeah, and then you use this all to conclude of what may happen next. But this may also complicate your life. So perhaps this kind of analysis is not part of your decision-making process. Maybe skip that particular indicator in your decision-making. And finally, if you are interested in correlations, and this only really applies if you have multiple positions open and you don't want to double dip, You don't want to have two positions, which basically is the same trade, but across two different symbols, which are highly correlated. Well, TI pairs would be the indicator for you because it shows you directly on your price chart, hey, which symbols are currently correlated, either directly or indirectly, and which ones are not correlated. And of course, in trading, you want to make sure that you trade uncorrelated markets to diversify properly. All right. So this is where the market sentiment indicators come in. They fulfill a very specific task in your trading. And just ask yourself the question, is this something you want to do in your trading? Yes, then this indicator should be on your chart. If not, perhaps you may want to skip it.